CNBC TV 18, embarking on a quarter century of excellence.
Positive close on Wall Street ahead of the November inflation print. The Dow surges over 150 points, while a pullback in large-cap tech stocks limit gains on Nasdaq. All eyes now on the last FOMC meeting of the year, which begins today. Meanwhile, stocks in the Asia-Pacific open higher, and GIFT Nifty is also suggesting a positive open for the Indian market. India's retail inflation is expected to inch up largely due to higher food prices and spike in price of tomatoes, onions and other cereals. A CNBC TV 18 poll sees November headline inflation at 6%. Factory output for October will also be released today and is expected to come in at 10.5%. The Reserve Bank of India says the fiscal outlook for India's states and union territories remains favourable. Lower revenue expenditure provides space for higher capital expenditure with fiscal consolidation. Debt burden of states is also declining. Infosys CFO Nilanjan Roy resigns to pursue personal aspirations outside of the company. Jayesh Sangragja to take over. Infosys ADR ends around 3% lower. Mohan Yadav is the new Madhya Pradesh Chief Minister. Rajendra Shukla and Jagdish Devda will serve as Deputy Chief Ministers. A three-time MLA from Ujjain South, Yadav was flanked by former CM Shivraj Singh Chauhan and other senior leaders as he met the governor to stake claim on government formation. Good morning in the Mumbai News Centre. I'm Sonal Bhutra. You're watching Power Breakfast. Those are the top headlines. But if you look at the markets, the global markets that is, there are a lot of positive cues that we are talking about. So first up, let's take a look at the Asian markets, largely higher as we speak. We have the Nikkei, which is the biggest gainer today. That one is up around 0.5%. In fact, we are seeing similar moves in the other indices as well. So Hang Seng, which is up around 0.4%. Taiwanese index seeing similar amount of gains. Kospi too is higher by around 0.3%. And it is ahead of the Fed's two-day meeting that kicks off today. And also generally, Japanese yen has strengthened against the dollar. We are seeing that producer prices in Japan have risen at a faster pace than expected at around 0.3% versus a poll of around 0.1%. And there are positive cues coming in from the US markets as well. So all of them leading to higher levels on the Asian markets as well. The GIFT Nifty, that will come up for you on the screen, and that is indicating that the start for our own markets could be in the green. Yesterday was comparatively a softish day. We did end in the green, but today it's a 64-point uptick, which the implied open suggests if we compare it with Nifty futures. Well, that's all about the Asian markets, but in the US markets, Wall Street ended higher on Monday, clinching a third straight session of gains. S&P climbed 0.4%, Dow was up 157 points, while the tech-heavy Nasdaq gained 0.2%. Investors are looking ahead to inflation data due tonight. Also, the two-day FOMC meet begins today, and the Fed is expected to maintain the Fed funds rate steady, while Fed Chair Jerome Powell is also expected to reiterate his commitment to lowering inflation. Let us, on that note, listen to some important opinion coming in from market experts on the expectations from the Fed meeting and the current market trends.
I think the prevailing theme is going to be three things. One, the point that you've made, which is making good progress but not yet done. So I think we'll continue to hear the question of wanting to be convinced before completely moving in a different direction. Secondly, I think they're going to also indicate that when they move in a different direction, it will probably be further out than the market currently expects. And so this notion, I think they'll keep pushing back on this notion of cuts in the first half of the year. And then finally, I think they'll point out that the recent data suggests that the economy, while slowing, is not falling off a cliff. It's handling higher interest rates reasonably well, which I think will give them the ability to continue to talk about higher for longer. So I think it's going to be a so far so good message, but with a pushback against expectations of a pivot to a cut early next year.
I think it's a bit of a new regime, right? The Fed, even if they ease, they're not going back to zero. Inflation is still out there somewhere. Growth still seems strong. So I think it's hard. We had 10-year notes closer to 4.07 a couple days ago. That's a tough level, right? You're really betting on a lot of slowdown. I think when you get in this 410 to 450 range, you'll see a lot of work being done in here because we didn't do it before on the way through.
All right, that's global market action, but how will these overnight cues impact our own markets? We have a research team joining in with just that, the trade setup, the stocks that are likely to be in the news and the action from the F&O space as well. Hey guys, a very good morning to all of you. Ekta, looks like it could be a good day. What is the market setup looking like today?
Thanks for that. Well, yes, there have been many good days on a trot. The markets did post a record close but ended off the intraday highs. Yesterday, the Sensex crossed 70,000 on an intraday basis. FIIs net bought around 1,261 crores. They've net bought around 12,000 crores plus in December month to date. And DIIs also bought around 1,032 crores in yesterday's trading session. The big cue is that the Fed meet begins on the 12th of December, which is today. We also have the US CPI data for the month of November, estimated to be flat on a month-on-month basis, but the core CPI is still expected to be steady at around 4%. Global markets, US markets ended higher, Dow at the highest levels we've seen since Jan of 2022. Asia, Japan has really led Asia higher this morning. Crude oil largely flat with investors still a little wary. So Brent crude at around $76 per barrel. GIFT Nifty indicating a positive start. We also have cues such as the macro data from India, the CPI data, which is estimated at around 5.7 to 6%, and IIP, which is estimated at around 10%. So a lot of cues from the macro front. Global cues would be top of mind.
Oh, absolutely. Thank you so much, Ekta, for joining us with all those cues. A lot of stocks on our radar as well. Hormaz is joining us with that list. Morning, Hormaz.
Morning, Sonal. Plenty of them as always. And I'll start off with some QIPs and block deals. I'll start off with Sterling and Wilson, which launched its QIP last evening. It's a 1,500 crore issue. The floor price is an 18% discount to yesterday's closing price. We've reported about this multiple times. Vivek had highlighted this on the 6th of December. It was also highlighted on the D Street Chatter yesterday on the 12th as well. And J&K Bank also launched its QIP. It's a 750 crore issue. The floor price is a 9.1% discount to the current market price, and we had reported about this at the D Street Chatter yesterday as well. Mankind Pharma, where a block deal is likely to take place. Sources say that 6.9% of the total equity worth around 4950 crore is likely to change hands, and it also has an upsize option of another 7.9% worth nearly 5,500 crore rupees. The floor price of 1785 per share is a 7% discount to the current market price, and Beige Investments, Link Investment Trusts are among the likely sellers in this transaction. Another top level exit from an IT company, this time it's Infosys, where Nilanjan Roy has quit as the CFO. That will be effective from 2024. Jayesh Sangrajka, the current deputy CFO, will take over in that role. And in reaction to this news, the Infosys ADR ended nearly 3% lower overnight. Sun Pharma, it has revised its offer to acquire the remaining outstanding shares of Taro. They now plan to acquire those shares at $43 a piece compared to the earlier offer of $38. But they have also mentioned that there is no assurance that these negotiations will reach a definitive agreement. Rail Vikas Nigam, where its joint venture has emerged as the lowest bidder for a Madhya Pradesh Metro Rail Corporation project, was 543 crore rupees. Dixon Technologies, where its arm Paget will manufacture laptops and notebooks under the PLI 2.0 scheme for Lenovo. And remember, the stock ended at a record high yesterday. And SpiceJet, the board meeting that was supposed to be held yesterday, will continue today as well for its fundraising and for its earnings as well. Back to you.
Okay, all right. Thank you so much, Hormaz, for joining us with that list. Let's now talk about the F&O space. Nigel is joining us now. Hey, Nigel.
Well, morning, Sonal. The markets are looking very, very good. The Nifty, in fact, you're not even getting those shallow dips of around 100 points. So the trend is up. But in the near term, just want to highlight a couple of facts. When the Nifty moves up, normally you see the VIX cool down. That didn't happen yesterday. Maybe it's ahead of a big event because the IVs are moving higher out there. So that's sometimes a word of caution, maybe in fact a small pullback or maybe some kind of consolidation just in the near term. So putting that on the table. Next up, what do the FIs do? Well, they added some mild, mild long positions as well as some short positioning. Currently, in fact, the short positioning is at around 43%. On the options data side, well, the 21,000 call, well, that was fairly active, as well as the 20,900 put. And both those two, they have the highest open interest. So, just plugging in those numbers out there, or the 21,000 call, if you're writing it, then the 21,100 level, that becomes a bit of a resistance zone. On the downside, we have seen the 20,850 numerous times has been defended in the last few trading sessions. I think that will come up for you at some point of time. So 20,850, that's a crucial support zone on the downside. Today, the important trigger will be the Nifty Financial Services Index because that's the one that plays out weekly expiry today as well. And the broad range is at around the 21,000, 21,400. The index you're looking at actually should be the Nifty Financial Services Index, not the Nifty. So, just keep that in mind. That's at around the 21,200 or thereabouts. For starters, the GIFT 50 suggests we start off in the green. Can we go ahead and decisively conquer the 21,000 mark? That's important, but resistance is seen at around 21,100. Back to you.
Okay, all right, guys. Thank you so much for joining us and prepping us up for this trading day ahead. Time for a short break now. When we return, the RBI says the fiscal outlook for India, states and union territories remains favorable. More details on the other side. Stay tuned for that.
CNBC TV 18, embarking on a quarter century of excellence. CNBC TV 18, embarking on a quarter century of excellence.
Welcome back. You're still watching Power Breakfast on CNBC TV 18. Well, the Reserve Bank of India says the fiscal outlook for India, states and union territories remains favorable. Lower revenue expenditure provides space for higher capital expenditure with fiscal consolidation. The debt burden of states is also declining. Ritu is here to explain all this.
Well, RBI's annual state finances report finds that there was an improvement in state finances in FY23, which was sustained from last year by containing gross fiscal deficit within the budget estimates for the second consecutive year. Now, what helped achieve this? This consolidation was achieved mainly through a reduction in revenue deficits, even though capital outlays remained strong. Now, overall for states and union territories, the ratio of gross fiscal deficit to gross domestic product, that declined from 4.1% in FY21 to 2.8% in FY22, below the budgeted estimate of 3.2%. But if you look at the data at a disaggregated level, there were 19 states and union territories which have budgeted a gross fiscal deficit to GDP ratio exceeding that fiscal responsibility legislation limit, which has been prescribed at 3%. If you look at the states which are running the highest deficits, by the way, 2 out of these 5 went into elections this year. Rajasthan tops the chart at 4.4%, followed by the likes of Tamil Nadu, Madhya Pradesh, Kerala and Uttar Pradesh. So what led to the reduction in gross fiscal deficits? Largely because of a moderation in the revenue expenditure, and that coupled with an increase in revenue collection helped them post these numbers. So if you look at the deficit, revenue deficit as a percentage of GDP, from 1.95% in FY21, it is now estimated at 0.3% in FY23. Now, during the last financial year, FY22, the revenue receipts had increased sharply, as we know, because of the lockdown being relaxed at the time and the rebound in economic activity. And for FY24 as well, states have budgeted a sharp increase in revenue receipts compared to the previous year, because they are expecting a broad-based recovery in almost all major components, whether it is SGST, sales tax, excise duties, etc. Now, also a quick look at the capital expenditure of the states, and that includes your outlay as well as loans and advances by the state governments. That's also expected to improve in FY23 because of a strong growth in tax and non-tax revenues and the advancement of payment by the Centre for Tax Devolution and GST compensation, which gave states the space to spend more. But do note that, excluding the central transfers of 0.81 lakh crores under the scheme for special assistance to states and capital investment, the capital outlay for states in FY23 would have been at 1.9% of GDP, much lower than the year before. Now, the overall states' outstanding liabilities, they are budgeted to fall to 27.6% of the GDP for FY24 from the peak that we saw of 31% during the COVID years in FY21. But outstanding liabilities could remain higher than 30% for many states. If you look at the most debted states, Punjab, Rajasthan, Kerala, Bihar and West Bengal are some of the states with the highest debt to GDP ratios at the moment.
Ritu, thank you so much for joining us with all those details. It's time to stay with the RBI. Despite improved fiscal health of states, the Reserve Bank has reiterated that states should not revert to the old pension scheme, as it could spell fiscal disaster for them. The RBI has also estimated that if the states were to go back to the old pension scheme, the fiscal burden would be 4.5 times that of the current pension scheme. The central bank has also suggested that the 16th Finance Commission should reinstate some fiscal efficiency parameters to rein in the states from going fiscally overboard. Okay, on that note, we'll slip into another break. When we come back now, we'll talk about all the cues from the commodities markets, so stay tuned for that.
CNBC TV 18. CNBC TV 18, embarking on a quarter century of excellence.
Welcome back. You're still tuned into Power Breakfast. Well, it's time to talk all about commodities now. Manisha Gupta is joining us with all the update. Hey, Manisha, good morning.
Hi, morning, and thank you for that. Well, I'm looking at the crude oil prices, which are trading steady ahead of the U.S. inflation data. Well, all markets really watching out for the last inflation numbers in this year. And, of course, the last U.S. Fed meeting as well kickstarts today, where we will hear the announcements tomorrow. It doesn't really end with that, because come Thursday, and you will have the Bank of England and European Central Bank monetary policy as well. So there's just too much to watch out in sense of data and global central bank meetings there. Well, ahead of that, we also have seen some profit-taking happen in case of the metal prices. Gold is now steadily trading below $2,000 per ounce. It's a sharp reversal from record highs that we saw in the first week of December itself. It is profit-taking that you are seeing across metals as well. So the iron ore prices have come off their 1.5-year highs. Copper, aluminum, and zinc have seen a decline anywhere between 0.5% to 1% in last two trading sessions. The Chinese economic data has been on the weaker side, and that continues to weigh on as well.
Okay, all right. Thank you, Manisha. So that's what's happening with base metals. But let's stay with commodities. Let's also listen into Dan Yergin, the Vice Chairman of S&P Global, who spoke about the supply and demand of crude oil and its impact on the prices.
China's reopened. It's not going to reopen again. So demand next year is expected to be about 1 million barrels a day less than the growth of supply. And as long as supply and demand dominate, you're going to have that downward pressure on price. For the OPEC plus countries, they've been cutting and said they'll make further cuts. The choice for them is, do you keep cutting, or do you do what happened in 2014, let the price slide and sort of pull our cold water on developing new supplies?
Okay, all right. That is all about crude oil prices. But moving on to some national news now. The suspense over the next Madhya Pradesh Chief Minister is over. Three-time MLA Mohan Yadav will become the new Chief Minister of the state. The 58-year-old will be succeeding Shivraj Singh Chauhan, who led the state for close to 2 decades. The state will also get 2 deputy chief ministers, Rajendra Shukla and Jagdish Devda. Yadav met the Madhya Pradesh governor to stake claim on forming the government. He was flanked by outgoing Chief Minister Shivraj Singh Chauhan and other senior leaders as well. And meanwhile, all eyes will be on who will be Rajasthan's next Chief Minister today, as observers from the BJP led by Rajnath Singh are scheduled to land in Jaipur at 11 a.m, followed by a legislative party meeting at 4 p.m. So, of course, we'll get you all the details on this one. But for now, we'll take your leave on this edition of Power Breakfast. Stay tuned. Bazaar Morning Call comes up next with all the market action.
CNBC TV 18, embarking on a quarter century of excellence.